Thank you so much for having us. Firstly, I think just want to mention that.
For sure.
So, quick introduction of myself. I'm EY, co-founder of Aurigami, and today with me is Lucas as well, who is also a co-founder of the Origami team. So we're very glad to have this opportunity to share more about Origami with the listeners today. So for those who are listening in for the first time, essentially what Origami is that we are a non-custodial native money market on Aurora. So essentially, the service that we provide is for users to deposit assets and earn yield, and at the same time, they could also borrow if they over-collateralize their assets. Right now, we have supported 9 of the largest assets on Aurora, so including the typical USDC, USDT, BTC, ETH, and RAP near of our where we want to be, right? Our aspiration is that we want to become the foundation of a thriving DeFi ecosystem by being a leading liquidity aggregator on Aurora, right? So in terms of missions, our 2 key missions is firstly to make it simple and to make it seamless for users to supply liquidity and interact with Aurora ecosystem. And secondly, of course, is more on the developer side. We want to have Origami become a key building blocks for protocols to integrate and also to access the liquidity that we have captured. Now we are backed by world-class VCs, so we are quite fortunate to have done a private round, which was led by Dragonfly Capital and Polychain Capital. And in May, we had a very successful token launch event where we collaborated with 3 of the top tiers launchpads. Basically, they are KuCoin, Bybit, and Impossible Finance. Right now, we are ranked as one of the top 3 projects on Aurora by TVL. We have around 30 million liquidity, and of course, it's something that will be growing in the future. So yeah, so that's a quick update from our side.
Awesome. Love to hear it. Sounds like everything's going pretty well over there. And then, Yaron, do you want to give a little background on yourself and Risk DAO?
Yeah. So I'm Yaron. I'm founder and lead developer in B Protocol, which is kind of the parent DAO of the Risk DAO. I'm also, of course, core member and contributor to the Risk DAO itself. B Protocol is basically a liquidity protocol that specializes in making lending markets more secure, especially around liquidations of underwater accounts. The Risk DAO is an initiative we spawned together with our lead investor, which is 1KX Capital. So it's a sub-DAO of B Protocol, which actually helps protocols and lending markets to analyze economical risk. So we have a community of researchers that helps developing the mathematical models, executing stress test simulations, and building environments. And this way, kind of automatically analyze risks in lending markets, especially the economic risk.
Awesome. That makes sense. Yeah, I think risk assessment is something I haven't seen too much of, but I can see how it's definitely a big use case for it, and especially during these times, it's very important to have. But Origami, you mentioned Aurora, so I was curious, what went into your guys' decision to build on that, and kind of what you like about Near, and then what makes it different from other money markets out there?
Sure. So we started looking at Aurora quite early on, which was late last year, November, December last year. And back then, of course, there was a glaring gap in the market whereby there isn't any money market on Aurora. So that was the gap that we were aiming for, and we wanted to seize the first move advantage to come in and establish ourselves as a native money market. Because I think all of us know that the money market, along with taxes, they are the other foundation or the building blocks of DeFi ecosystems. In terms of the other reasons, I think two main reasons. The first is that we were convinced early on about the technical superiority of Aurora, whereby dApps like ourselves, we get to enjoy faster settlement that's happening on the Near blockchain, and at the same time have access to all the EVM toolings, including the liquidity on Ethereum through the native Rainbow Bridge that's built by the Aurora and Near team. And secondly, we were quite confident, and it's true that this came about, is that Aurora and Near were able to attract reputable VCs to come in and put in serious capital, and that of course translated to generous DeFi grants. We ourselves, we are a proud recipient of the Proximity Labs DeFi grant, And through that, we were able to make sure that we pass that on to in terms of incentives and rewards to our users to encourage them to come over to do liquidity mining. And of course, by getting more users on board, we then can attract more developers, right? So kicking off a virtuous cycle. So that was the key reasons on why we came onto Aurora. So in terms of what makes us different, I think that there are a couple, but if I were to highlight a few, firstly, it's on our liquidity mining program. We have this very, I would say, very interesting way of dealing with liquidity mining, right? Because as we all know, liquidity mining is one of the cornerstones of all DeFi projects to bootstrap liquidity. So the way that we have done it is that we have introduced this thing called the liquid lock token. Essentially, for our liquidity miners, you get two types of tokens. One is the native token, which is Ply. And at the same time, you also receive a lock version of our native token, which we call Pulp. And the reason why it's called liquid lock token, right, is that this token, which is Pulp, is actually an ERC20 token, right? So it's freely tradable and transferable. And by introducing this, and of course to introduce some form of gamification into our liquidity mining program, which encourages people to hold on to their rewards rather than claiming it, we are able to, firstly, of course, to reduce the selling pressure, or to better control the circulating supply of our native token. And secondly, of course, it opens up a few interesting use cases, right? So we now have an opportunity for certain users who wants to long Ply to come in to buy Pulp at a much cheaper rate, which can then, of course, be converted one-to-one to Ply at a later date. And not only that, we built on this use case, right? So recently, we also launched a Ply game. Essentially, what it does is that it allows users to shorten the vesting period. So we mentioned that Pulp is a lock version of Ply, and we do have gamification that we have launched, and there will be more coming in the future, whereby users can shorten this vesting period such that they can claim their Ply token earlier than the other players. So that's one key. The second, of course, it's something that that differentiates us from other lending markets, is that, and of course we can talk about this more later on, is that we are very prudent when it comes to our risk management. And this can be seen by one of this report that actually from DAO, right, the bad debt dashboard, where we are one of the few protocols to have zero bad debt and also zero insolvent accounts, right? So that is a testament or strong evidence of the resilience and of course the comprehensiveness of our liquidation engine, and is a result of the kind of like the risk parameters that we have introduced to be more on the prudent side, and also the kind, and also the reason why we also engage DAO to do further studies, right, to further optimize that, to ensure that we always protect our users' funds, we always protect their collaterals and their assets, and we'll continue to do that in the future.
Hey guys, I'm Mikhail here, business development and strategic partnerships for CertiK. Thanks so much for joining us. I have a question, UI. You mentioned about the risk management. So how did the relationship with ERN and DAO, how did that come about?
Well, we first got engaged with DAO after seeing this initiative, which is the one that we just mentioned, right, where they published this bad debt dashboard comparing all the leading lending protocols in terms of what is the worst case scenario in terms of bad debt, in terms of how they rank against each other, or as a percentage of the TVL. So that was how we got to know them. And after conversing with them, of course, we found out quite quickly that they are able to provide a key service for us, right? They will be able to have to help us to have a holistic view about how our loan LTV ratio and also our liquidation fees or any of our other parameters, how they interact with each other, right? How they affect our users when it comes to collateral related risk. And of course, they can also help us to, through their mathematical models, they're able to help us to understand what are the worst case scenarios. So for example, if the worst day that happened, the worst trading day will to happen tomorrow, what will that translate to in terms of impact to our users? Will there be any bad debts? Will there be any liquidations that we will not be able to do because of restricted or lesser liquidity that's existing in the ecosystem?
Awesome. Yeah, I was going through the DAO, the bad debt leaderboard kind of thing, and I see that you guys are, I think, the only ones with no bad debt. So that's a good sign.
Exactly.
I was wondering, so can you tell me a little bit about this, the leaderboard kind of thing, the lending markets bad debt board that you guys have? just kind of high level what it is, what users should look for?
Yeah. So like part of the Risk DAO main activity, other than helping other protocols, is also trying to kind of educate, like the users and the ecosystems. But actually, what they're doing, and like lending markets are actually one of the maybe least known, kind of how they really work under the hood. So maybe many knows how, like Uniswap, SimpleDex works. But lending markets are order of magnitude more complex. And while providing liquidity for DEX is kind of, so you have trading risks and might have impermanent loss risks. But it's kind of a simple operation where you just deposit and then later withdraw when you want. In lending markets, users are kind of in the dark there. They don't really, some see it as completely risk-free, some have no idea what is going on there. And of course, lending markets are doing good jobs in, like highlighting the advantages of everything. But one of the key metrics in lending markets is whether it's actually insolvent or solvent. And an insolvent market will eventually result in users who might not be able to withdraw their deposits. And the way DeFi lending market works is such that eventually if there's a run to the bank, so users, kind of stand to lose 100% of their deposits if they are the last to withdraw. So basically bad debt is an account where the debt is bigger than the collateral. Typically in such account, the collateral might be even zero, but it still has debt. And usually it's either because of extreme market conditions. For example, some project had the UST as collateral, and it either went down very quickly or they set their own oracle, they hard-coded it to 1. Some of it is because, this all stem from bad risk management. Some just have bad debts because of hacks, and other has bad debts from, some tedious technical reasons because there are a lot of complexities, for example, around MakerDAO, around DAO to DAO lending. So we decided initially just to go take all the compound compatible platforms and, kind of display how much bad debt they had. We were pretty sure that in most of them it will be kind of negligible numbers. So we just, like took the top ones from DeFi Llama. But like very quickly, we realized that some has bad debt. And then we tried to confirm many of the numbers with the teams. So overall the teams, they did reply, but still trying to hide stuff. So it got some kind of traction, and was in retrospect very interesting activity because we got to get in touch with all these protocols, really understand where bad debt stems for, and kind of as a service to the community, when users consider if they want to use lending platforms. So of course the risk parameters, risk reports, smart contract audits, are of course one of the things they should look for, but also bad debt. So you see platforms, if you see Venus on Binance Chain or Iron Bank on Ethereum. So they all have audits, they all show their APY in the website, but nowhere do they mention that basically they have some insolvency. And if you look at, there are even worse projects like RIM or Inverse Finance, who are almost fully wrecked, but still accept user deposits. So this is kind of a tool for users that, before you use your lending platform, or even when you use, come once in a while, check if your platform is really solvent. And also, for the lending platform out there, we also accept open source contribution there. So if you want to get your lending market listed, just make a PR, and we'll also feature you there.
Yeah, you make some really good points. I think it is a often overlooked or not even thought of kind of thing when people are looking for different lending platforms, because they look for security and that kind of stuff. But I mean, that is a great tool for users to have to kind of go in and get that inside look of the debt and all that stuff. So that's definitely a great tool. And you mentioned like the education for users, because there's some similarities between what we do and what you do. And I think it's important to kind of explain that to users and show them the benefit of it, because as we've seen on our side, like you can put out the best kind of info, but if users don't know what to look for, how to understand it, it kind of just fades away. So it's definitely a big part of what we do is just educating the community on what resources to use, how to look at it, how to understand it, and that kind of stuff. And then Mikhail, did you have a question for them?
Yeah, quick follow-up, Yaron. So, I mean, it sounds very similar to like what Gauntlet does. So, curious to know like what are some of the differences between what you're doing and someone like Gauntlet?
Yeah. So that's a good question. First of all, for the bad debt, it's not something, this is something we offer to the community, not as a service, and it's not something that Gauntlet are offering. But in terms of the risk management and kind of escrowing the projects, so yeah, this is something Gauntlet also offer. Our methodology is different. We, in particular, specialize into approaching more early stage lending markets and markets on L2s or altchains, and of course Origami is both of them. So Gauntlet are using very different mathematical model, which is called agent-based simulation, and this model critically relies on assumptions on how user will behave. Now, DeFi users in general, it's quite small group of people. Even in platforms like Compound and Aave, you barely have data there. It's very sparse data. And of course, if you go to, at early stage lending platforms or even platforms which either before their, like their big next growth move, or, even are not, or just going live, then of course you have almost zero historical data on how users are expected to behave. So in our approach, we actually take benchmarks and data from CeFi exchanges, such as Binance Futures, Bybit. There's much more data about liquidations and how liquidations happen during price movements than the one you have on DeFi. And the core novelty of our model is how we extrapolate this information and use it to backtest risk parameters of lending market. So using different simulation model is one key difference. The other key difference is that we specialize on L2 and altchains, so Origami is on top of Aurora, which is L2 of NIR. And of course, on Aurora, for example, the ETH liquidity and even the NIR liquidity is much smaller than, if you compare the liquidity on mainnet on Ethereum, and of course lower than Binance liquidity. And this also crucially affects the successfulness of liquidations. So we developed a model that kind of deposits the liquidity flow for mainnet, and when we take into account how liquidity will flow from mainnet into these L2s during liquidations, and the delay that will stem because money has to flow and because bridges has some delays in them. So this all affects the liquidity. So this all affects the risk parameters, the ability to make successful liquidations, and these are very particular problems to L2s, which also Gauntlet doesn't model. So I would argue that these are our two main key differences in the models we have.
Yeah, thanks for sharing it. I can see the synergy there in terms of your specialization around L2s, and I want to stick on the whole security aspect of everything. Obviously here at CertiK, our main focus is around building transparency and trust with the communities, and we do that through the smart contract assessment. We provide a full end-to-end security solution for projects. So that includes KYCing them. That includes keeping track of what's going on chain. So there's a lot of different things that we look at in order to help build that trusting relationship with the communities. Going back to Origami, I'd love to ask you this question. If a user, or I should say a potential user, asks you, hey, why should I trust you? How would you answer that?
That's a pretty good question. So there are several things we can talk about for this. First, the security teams we are working with are some of the top ones in the space. For example, WatchPark and RiskDAO, they are well known in the security engineering community. We are also backed by some of the best VCs like Dragonfly and Polychain. And second, our code is based on Compound, which is one of the most battle-tested protocols on Ethereum. They have been securing billions of dollars of assets for several years without any issue. And third thing is that we list assets on Aurigami very carefully. So before each listing, we need to examine several risk factors. For example, token contract risk. For example, like if the token contract is audited, if this can be exploited easily, for example, like infinite mint of the token. And we also look at oracle risk to see if the price source is stable. And then we also look at the liquidity risk to see if we can do liquidation with reasonable slippage. And also with risk DAO's help, we are introducing deposit and borrow caps to further control the risks involved. In addition to those, there are several smaller things we are doing to improve the overall risk. For example, we have a monitoring system to detect any unexpected interaction with the protocol. So if necessary, we can pause the market and minimize the impact. So as the result of the above, you can see why we are able to maintain zero bad debt, and why many other lending protocols they have millions of dollars of bad debt.
For sure, that definitely makes sense. We're obviously big proponents of audits over here. I mean, we can't encourage it enough for projects and protocols to get audits and stay on top of that. And it's not, as we always say, it's not a one and done. I mean, there are many audits that are needed for different projects, so we're big proponents of that for sure. And then, so RiskDAO, I was curious, so take Aurigami for example. What's in it for them to engage with RiskDAO and work with you guys, and what can they do with the findings, and how can that help them improve?
Yeah. So on the most technical level and immediate level, so we provide them with dashboards, with online recommendations, and result of the stress tests, which is being updated, on a daily basis. And in terms of action items, there are very specific action items which are kind of team, or in the future maybe the DAO controls, such as risk parameters, which are collateral factors, debt ceilings, etc. So that's on the immediate level. It helps them take decisions on which parameters to configure in the platform, and these things changes over time, right? It changes especially as market condition changes, liquidity changes, user composition change, etc. On top of that, so these are recommendations for actions or for no actions. On top of that, of course, also monitoring key health factors such as Oracle integrity, monitoring big accounts, all of these are kind of lessons, that protocols in the past really suffered from. So Solend, for example, had this huge whale that they could not liquidate. They actually solved it in very reasonable way, but they got a lot of bad feedback because of it. So they had to specially kind of liquidate him and OTC his debt. Oracle's integrity, we saw a lot of projects getting wrecked because they used wrong price Oracle for Luna or for other stable coins, and as they slowly depegged, no one bothered to check that look, you're showing the wrong price. So these are also the kind of key factors that and health factors that we show them. Also for the medium long term. So right now, Aurigami is pretty conservative in the asset they list. They're all very kind of well-established assets. But as they move forward and want to list new assets, then some of them might require new mathematical modeling, especially assets that are composed kind of from other assets, and also general consultations on new listing of assets. From the security point of view, from the risk assessment point of view.
So then, I guess another thing, we'll move on to our favorite topic over here, CertiK, is security and just kind of the overall security landscape. So I was curious to get your take on that, and what, in your opinion, do you think protocols and users could do to do a better job in managing risk?
Yeah. So I think CertiK and maybe audit firms in general are doing a very important job in but I see them as kind of the base layer right? So it's kind of, look, the system does or the code does what the spec intended. But, of course, also Luna was audited. If you see, there were a lot of incidents in Rari Capital, for example, not only code bugs, but, just market operators who, kind of did stupid stuff. And which resulted in bankruptcy, not because of any bug, everything worked as intended, but just because there was obvious economic risk there that was ignored. So definitely, so people today already know to ask and require the platform to have a smart contract. We see economical risk as kind of the next step that is built on top of the smart contract and security audits. And yeah, users, in principle, and I think over time will get more educated, but also be more educated in asking, also for these higher level security audits and risk assessments. And yeah, and like following the Luna saga, I think it becomes, both more apparent. Also, we get approached by many people because of it.
Yeah, that makes sense. It's something like a double layer approach. And I mean, over the last year or so, we've definitely seen an increase in the focus on security. I mean, unfortunately, that comes out of hacks and exploits and that stuff, and people really start to think, oh, I have to take this more seriously. So I definitely think the risk assessment is another layer to that will kind of get more focused on as we go on and this ecosystem grows for sure. But like, for example, you bring up Luna, and there's things such as that a security or like smart contract audit necessarily won't alleviate. So there's definitely need for other systems and platforms in place to kind of detect stuff like that. And then before we move on to live questions, I guess this question goes out to both of you guys. So what is your long-term growth plan? And how does this partnership between you guys help with that and achieving your goals? I don't know who wants to start, but
Yeah,
Do you want
maybe
to start first?
yeah. So I start with the RiskDAO. So RiskDAO, constantly building more tools and models for, like better analytics of lending markets. And in addition to giving services, one of our kind of soft goals is also to increase education in the community. So growth plans are definitely, like along with Origami to increase education there and awareness, and also open source tooling. Also kind of in a hybrid approach with, Origami, but also with others. Growth plans in the future is also to kind of monitor, like portfolios in especially wealth portfolio and especially maybe DAO treasuries. Like especially DAO cannot maybe invest their money in CeFi. They have to stay in DeFi and want relatively lower risk. So these today they have, like their own in-house analysts and researchers, and they really appreciate, like transparency and tooling that help them, like make decisions. So that's from the risk downside.
Yeah. For us, our goal have always been growing the liquidity and become the key building block of the Aurora's DeFi ecosystem. It's very clear that security is one of the most important factor when it comes to deciding which lending protocol to use. So we need to educate public that Origami is one of the most secured lending platforms on in the space, and probably the most secured on Aurora. So RiskDAO's dashboard and bad debt ranking is especially helpful in this regard. It allows users to rank lending protocols by bad debt, so it becomes very clear that Origami is one of the is doing very well in its risk and the liquidity management. Also, we are thinking about introducing an isolated market to support projects on Aurora ecosystem. It's going to be a market for early stage and the native assets on Aurora. So engaging with RiskDAO can help us come up with more optimal parameters for these new assets. So we can support more assets with confidence. So we are very excited about this partnership with RiskDAO. It's an important step to further grow our liquidity as well as the DeFi ecosystem on Aurora.
Awesome. Well, I've definitely learned a lot so far about both of you guys' projects, but I was wondering if anyone listening has any questions they'd like to ask. Go ahead and hit that request button, and we'll bring you up. But in the meantime, Origami or Risky, is there any other topics you want to touch on or discuss while we're kind of here at the platform?
Actually, I have a question for the guys, and this I can open this up to anybody. You're seeing in the news that 1.4 billion dollars hacked this year so far using crypto bridges. The bridges have obviously been a very big point of emphasis. You're looking at what happened with Nomad and Ronin back in March, and Wormhole, who we're currently auditing right now. What are your thoughts in terms of when people are seeing this in the media, how do we earn their trust again to come back into crypto?
Yeah, I think maybe, it resembles a lot on what you saw on centralized exchanges, up until 2 or 3 years ago, where they were almost hacked on a yearly basis. I think even Coinbase, definitely Bitfinex, I think even Binance at a certain point. And yeah, it seems like, mostly maybe growing pains and, eventually after sufficiently enough hacks, they will kind of get a hold of their OPSEC security, right? Because a lot of the bugs here were not smart contract bugs, but even Nomad was kind of configuration bug. Other hacks were just a private key that got stolen. So yeah, I think at least hope that the same way that centralized exchanges got to be more secure over time, so also bridges, or at least the ones who survive, will get to be more secure. But yeah, that's definitely like a major point right now of pain, and probably also kind of suffocate a lot of growth because people are just afraid to move funds from one chain to another.
Yeah, it's definitely Lucas, go ahead.
Oh yeah, I agree with what Yaren said. I think it's hard to avoid those kind of hacks, but it doesn't have to. It doesn't happen to all the bridges. There are bridges that survive those kind of hacks. So I think it's also a message to the users that some ecosystem may be more secure and they can feel more comfortable to use. And also, I think one thing that will be important to those users is that, for example, like Aura, like Rainbow Bridge, they have this generous bounty program. So this kind of encourage hackers to report those bugs to the team instead of exploiting it.
Yeah, definitely. I think the bridge attacks have made up over 50% of the losses in Web3 so far this year. So it's definitely a newer thing that I think everyone's trying to figure out. At the same time, there are inherent security risks when dealing with them. And I know on our end, we're doing what we can to kind of figure out new ways to alleviate this and solve this, but it's definitely an ongoing issue. I mean, the Nomad one was just one example of it this year, but there's been quite a few. So it's definitely an interesting topic, and unfortunately is what makes the news most of the time about crypto. So hopefully you can kind of get a handle of this all together with different areas such as your risk assessment and audits with us and that kind of stuff. But I'm not seeing any requests to speak. So, I mean, we can go ahead and wrap this up if you guys would like. I've definitely learned a lot. You guys have shared a lot about your projects, but I guess I'll say again, any closing remarks or anything like that you guys want to touch on or share with the people?
Yeah, I don't know. Stay safe out there.
That's definitely an important one.
Yeah, of course, stay safe out there. It's definitely a good advice, right? I think talk a lot about education. So yeah, definitely encourage our users or any other users of crypto out there really to try to understand or to really understand what you're getting into, right? Before committing any of your funds in there. So yeah, just same thing, right? Stay safe out there.
Yeah, I definitely agree with that. It's important for users to kind of understand because, a lot of times you figure out what went wrong when it's too late, and there's not enough education around the security and just overall risk in the space, so I definitely would encourage you. I mean, I know on our website, CertiK.com, we have a ton of resources and blogs on what users can do to kind of stay safe in their crypto journey. So I would definitely encourage people to go check that out. Read up on what to look out for, top red flags in projects, the top crypto scams we've seen, and just kind of the overall trends that we've seen in the last year and whatnot. So I definitely recommend people head over there and then definitely give everybody here a follow. It's been very informative, and I appreciate you guys' time.
Yeah, I just want to add one quick thing. So definitely stay positive right now. This is the time to build. This is when all of the great developments that protocols like Aurigami that are developing. This is the time to do those things and have confidence in the future. And it's a cat and mouse chase between innovation and interoperability and security. But in this particular case, CertiK is definitely leading the charge in helping make sure that we stay on top of it. So we definitely do everything on our end to protect everybody and make sure that the projects that are building are able to stay innovative and continue to build these amazing ideas that they're coming to us with. So definitely give everybody a follow. Thank you so much for all the input. And if anybody has any questions on the CertiK side in terms of our security services, feel free to DM me.
Thank you so much.
Yep.
Okay.
Thanks, everyone.
Sounds like a
Thanks,
good
everyone.
positive note to end on. I appreciate you guys coming on, and we'll talk again soon.